to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Chris Dearborn, Managing Director at Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Chris, it's been so interesting. I mean, since the Friday after Thanksgiving to what we have seen through Monday afternoon, it just seems to be these swings are pretty extensive, considering we didn't see 1% moves since like October 14th.
It's been kind of crazy, right? So the markets got off to a really bumpy start last week, right? The Omicron variant was what kicked off, but what really drove the markets into a tizzy is the Fed tapering plan coming out. And that pivot kind of caught people off guard, with Powell coming off as seemingly much more hawkish than he's been. It's really been since 2018 was the last time he was this hawkish, and that sent the markets into a spiral. That being said, large cap names continue to outperform and rally off the dips. And you're right, we saw significant moves last week, 1, 2, sometimes even 3% intraday moves, which is what we haven't seen since the beginning of this pandemic.
And Chris, let's pull up your first chart here and take a look at some of the technical levels that you're watching in the Nasdaq-100, which I'm sure has been pretty, fun trying to establish as we see these moves up and down. Yeah,
absolutely. So we made the new high 2 weeks ago today on November 22nd, 16,764. Since then, it's been a downward spiral. Remember, we talk about the relative strength index on a constant basis. The RSI at that point was over 70, and that's indicating that's overbought, and the index absolutely pulled back. Whether the technicals were led by the fundamentals or the fundamentals and the macro led to the technicals, either way, it lined up almost perfectly. To that effect, we had a significant pullback over the 2 weeks leading into that, and now we're sitting at support. So the 50-day moving average for the index is 15,637. We need to hold this level on a closing basis. We're there right now, and that would be a significant bounce for the index. Also supports chart, if you look at the Fibonacci's, which is the overlay on the vertical lines, we're looking at the 76% retracement, which almost coincides with the 50-day. That's 15,689. If we close above both those levels, it's kind of a bullish move here, or at least it's going to put a pause to the bleeding. And if you look at the bottom of the chart, the RSI now stands at a 46. Again, not quite the oversold territory that we were looking for, but it's starting to uptick a little bit again, that lower level where selling starting to wane and buyers are starting to step in.
Right. And if we take a look at your last chart here, we can see the constituents that are lending to performance with the Nasdaq-100.
Absolutely. It's the big boys as you expect outperforming today. Apple, Amazon, Meta, Microsoft, Intel, all up, adding significant points to the index. On the flip side, NVIDIA has been pulling back for a number of days, as has Moderna, and Tesla has been a roller coaster ride, as you expect, up or down 2% any given day. Today just happens to be a down 1.2%. For ups versus downs, we've got 3/4 of the constituents in the index that are in the green today are positive, so 75 to 25.
All right, Chris, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.